All right, so this week, the markets sent out this huge signal, one that just rippled across the entire globe. What happened? Well, the US dollar took a nosedive, and at the exact same time, precious metals like gold and silver just surged. Now, this was no coincidence. We're going to break down exactly what triggered this crazy shift and what it's telling us about where the big money is headed next.
So here it is, the whole story in one simple picture. On one side of the scale, you've got the US dollar, which fell to its lowest point in weeks. And on the other side, assets like gold and silver shot straight up, just soaking up this wave of new investment. It was like a perfect seesaw, moving in complete opposition. So the billion-dollar question is, why? Why did this all happen so suddenly and on the same day? Like I said, it wasn't a coincidence at all. It was a direct reaction, a direct response to some new signals coming out of the US. Okay, to really get what's going on here, you can't see this as just another random Tuesday of trading. Nope. This was a really significant, coordinated shift across global currency and commodities markets. You could almost say this was the financial world voting with its wallet. And here's the absolute key. This was a fundamental reassessment of risk. Investors all around the world, they took a hard look at the landscape, they processed this new information about US policy, and they made a very clear decision. It was time to move their money to what they see as safer ground. So let's get into the why. What was really the main engine behind the dollar's weakness? Well, it all boils down to the comeback of a very specific investment strategy, something that the old-timers on Wall Street call the Sell America trade. Yeah, market veterans know this one well, the Sell America trade. It's pretty much exactly what it sounds like. It's that moment when global investors start getting nervous about the US outlook, and so they start pulling their money out of US dollar assets. Think US stocks, US bonds. And that is precisely what we just saw happen. And look, this wasn't just about one thing. It was this perfect storm of worries all coming together. You had growing anxiety about America's geopolitical stance, some really serious questions about long-term debt and spending, and this lurking fear that we could see new trade conflicts bubble up again. And this quote right here, it really nails just how big of a deal this is. See, for months, the dollar was the king because the US economy looked stronger than pretty much everyone else's. This move, this trade, it's a complete 180 on that feeling. The market's focus has snapped from economic strength to looming policy risk. So if all this money was rushing out of the dollar, it had to go somewhere, right? So where did it go? Well, the answer is right there in that surge we saw in commodities. It was a classic rotation of capital. Money moved straight out of US dollar assets and found a brand new home in defensive, hard assets, and specifically gold and silver. People weren't chasing huge, risky profits here. They were running for cover, looking for stability. You know, there's this classic seesaw effect in global markets, and that's exactly what's at play here. When the dollar falls, things like gold and oil, which are priced in dollars, they basically go on sale for any investor holding a different currency. And naturally, when something gets cheaper, global demand for it goes up, pushing the price right back up.
And this is interesting. While gold got most of the headlines, it was actually silver that had the better day percentage-wise. I mean, both went up for sure, but silver's surge was even stronger, and there's a really good reason for that. So why these two metals? Well, investors didn't just pick them at random. Gold is the world's classic go-to insurance policy against chaos and uncertainty. It has been for centuries. But silver has this fascinating double life. It's a safe haven, yeah, but it's also a critical ingredient for industry, for things like solar panels and new tech. That adds this whole other layer of demand to its story. Okay, so we've covered the what and the why, but here's the biggest question of all. Does this one day of market drama actually matter in the long run? Or is it just, another blip of market noise? And that's a totally fair question, right? Markets bounce around every single day. So was this just routine ups and downs? Well, the consensus among the big portfolio managers is a very, very clear no. And this right here, this is the key insight from all the analysis. This isn't being seen as just a quick, transient trade. It's being viewed as a signal of a macro inflection point. In other words, a sign that a huge, long-term trend might be turning a corner. So let's be really clear what that means. A macro inflection point is a fundamental pivot. It's that moment when the basic story that's been driving the markets for months or maybe even years actually starts to change. And that's why this is such a big deal.
Okay, so what's the proof? How do we know this is a real signal and not just a fluke? It's the alignment, the harmony. It wasn't just one market moving. You had currencies, commodities, and even the interest rate markets all singing the exact same song at the exact same time. And that song was, capital is repositioning for policy risk. That kind of synchronized movement is rare, and believe me, it is powerful.
All right, so knowing all that, what happens next? What are the big takeaways from this huge market event? What should we all be watching for as we move forward?
It really boils down to three big things you need to remember. First, currency risk. It is officially back on the radar for investors in a big way. Second, commodities are being treated as long-term strategic assets again, not just quick tactical trades. And finally, this whole episode just hammered home the important role that assets like gold and silver can play in a modern, risk-aware portfolio. So, at the end of the day, the new playbook is kind of set. The analysis suggests that as long as this fog of uncertainty around US policy continues to hang around, this inverse relationship, a weaker dollar fueling stronger precious metals, is probably going to be a defining feature of the market for a while. And all of this leaves us with one massive, lingering question for the future. This time, capital ran to gold and silver, the classic safe havens. But in a world that's being totally reshaped by digital currencies, by new geopolitical alliances, and by mind-bending tech, what's the next safe haven going to be? A precious metal, a cryptocurrency, or something else entirely? That's the multi-trillion-dollar question facing every single investor today.